Welcome everyone, Simon here from the Whales of Wall Street, back with a new video. IOTA is the topic today, one of my favourite projects on the channel, in my portfolio. Certainly one I think that has got incredible opportunity within a massive framework, certainly in the European Union, and something that we can really focus in on this video is how it will be utilized for that framework perspective, in particular with the things like KYC, and how that will portray itself through a multitude of sectors and opportunities that we will be using on a daily basis. I'm in the UK, so we're not part of the EU as such anymore, but we do have similar principles, similar sandboxes going on in the UK, and I'm sure as well in America and across the world. There is a lot of this kind of utilization going on. We're going to a bit of a dive around that because it will give us a bit more of an indication as to why we still perceive IOTA to be such a powerful asset to hold for the long term. We're going to the chart on that particular part of the topic as well, of course. In the meantime, don't forget to smash that subscribe button if you haven't done so already. Welcome to the channel if you're new. And welcome back to those that have been with us for some time, of course. I am looking forward to this one. Let's go straight into this. So first and foremost, for those that don't know, IOTA has been doing a lot of work in the background for a protocol upgrade relating to IOTA Rebased. This also allowed the opportunity to provide the opportunity for developers to come in on board and work on the IOTA framework system. They are offering, I think, is around $100,000 to be able to be part of that. Qualified developers working on this. Now, why would you do that? Well, the pure answer really is to keep testing the system, but also as part of the rebased aspect, or rebased. Sorry, I think I got that incorrect at the beginning. Was to essentially upgrade the scalability aspects of IOTA. We talked about in previous videos why scalability is so important. This isn't just about blockchain in terms of financial transactions. The whole opportunity, ability of blockchain working with the likes of AI and IoT. We've done so many videos on this. Don't forget to check out at the end of the video of this one more of a deep dive on that topic if you are interested, if you're new to blockchain or new to the philosophy of utilizing transactions per second outside the remit of finance. I think you'll find it quite interesting, but just a really quick recap on that is pretty much anything we will be doing moving forwards, whether it is sending money back and forth, or it is getting into a driverless car, or it is ordering something from the fridge by itself, all automated, algorithmic data from AI, IoT talking to each other in terms of devices or Wi-Fi or internet-based devices to and fro from each other. The blockchain aspect is there for the verification, the processing element of that. And if you can imagine everyone doing things all the time, whether it's buying, selling houses, as I mentioned, some of the food industries, the healthcare, imagine all that information going backwards and forwards about patient information or device information, upgrade information for certain equipment, etc. All these things, like you could go on an endless list. If they're going simultaneous every second, that is a lot of power and verification in those milliseconds to be done, right? There's a lot of networks out there, a lot of blockchain networks, both like 100,000, 50,000, 500,000 transactions per second. That's where the important is. I think when Visa if you look at Visa, I'm not sure the exact amount, but I think it's like between 3,000 and 10,000 transactions per second. You think about that from a financial perspective. That's not including anything else. Transaction, this word here, transaction, is taken from the wording of a transfer of an action. So this is to help the decentralized aspect handle over 50,000 transactions per second. I think it needs to scale up a lot more than that. However, I think you'll find that a lot of networks boast big numbers and they can't actually facilitate it when the push comes to shove. But it's still early days. Scalability is definitely an opportunity there. And that's why things like this aspect of Rebased allows developers to come on. IOTA keep improving. They keep learning themselves all the time. And that can reflect onto other projects that they are working on. So we have this ability to incentivize, or they have the ability, sorry, I have nothing to do with it, to incentivize potential developers to help build on that aspect of IOTA. So improving the mainnet constantly around that. And it ultimately cycles around to the bigger things. Now, for those that have been following the channel, I've been following this from day one pretty much. EBSI is this European Blockchain Association, essentially, that's very much committed to integrating blockchain systems, amongst other things as well, but predominantly blockchain, around Europe. Now, what does that really mean? Well, there's loads of things you need to consider, because we still got, even though you're in Europe, you still got a multitude of countries, okay? So for those in America that may or may not know too much about Europe, you think of it like the states, all the different states in America, they still have their own regulations and laws within each of those states, right? And it's the same in Europe. As countries, they have different regulations, rules, standards, etc. They're trying to unify that. So we've seen a lot of that around like the likes of MiCA or MiCA, however you want to say it, in terms of standardizations and legalization aspects of it. But in terms of the frameworks development, this is a really complex situation. So from a banking perspective, that's always been a bit of a dilemma with cross borders. Of course, got exchange rates, things like this. It's been kind of eased in the sort of last 20, 30 years or whatever since the euro coin was generated and created. It eliminated a lot of those problems. I don't even know if there's any European countries still left that use their own currency, but certainly not the countries I visit regularly. But that aside, you also have the complexity of any other transaction, for this argument's perspective, to be accommodated. And that means systems need to talk to each other on the framework, process, validate, confirm, etc., etc. So there's a big project here. Europe is massive, guys, obviously, and it needs to talk to each other in that digital world in a speedier fashion. So throughout this process of the last few years, I can't remember the original number, but 35 applicants down to 6, and then down to the last 2, which were finalized as the ability to create the framework, create the procurement program for the EBSI to essentially formulate that framework for Europe to use. Now, you could even imagine from an identity perspective, and this is where we come onto the KYC aspect. It's really interesting because if you think how many people, like, for example, go through train stations or subways or undergrounds or airports, and we've got our passports, got everything, this, that, and the other. But all this biometric data that's been gathering on fingerprints, facial recognition, etc., this all formulates part of the data plan. The overarching data absorption of our information, both from our digital footprints in terms of things we do on the internet, whether it's booking, flights, whatever, everything, all the way across through to what we're actually doing physically in the world as well. And as I mentioned earlier, if you think of how many people go through security gates all the time now, facial recognition, etc., KYC is actually a big part of that. Know your customer. It's not just for banking, those principles. It can be utilized for anything and everything. And IOTA has a huge development plan and part of that aspect of blockchain, amongst loads and loads of other things. But there's a huge area around security, privacy, again, linking up with several different standardizations or industry standards across Europe, across the world. You've got cybersecurity, which is a big part of that as well. Data processing. Now, until quantum really kicks off, and who knows whether that takes over blockchain or infiltrates it or works together, it remains to be seen. But the fact of the matter is, we're entering a phase now where we're all getting used to these things bit by bit. First it was kind of like cashless payments. Then it was, well, we don't want facial recognition, but we're going to use it anyway because now we're used to it, and actually it makes things quicker and easier. The ability to go through passport control quicker and easier. People go, oh yeah, that sounds cool. Okay, so you're happy with financial facial recognition now? Yeah, okay, cool. So we're quite fickle as human beings, where we're kind of like stand up for our rights and this, that, and the other, but then we immediately change our mind probably within 5 years because you see the benefit of something. But also in the background, we see the advantage of something physically, but we're also giving away a lot of information. Where does it go? Who's buying it? Who's selling it? And we're not getting any money for that. So there's actually a really interesting topic, which I can do a video on, whereby blockchain allows that transparency aspect, but it also allows with KYC for us to turn on and off which parts of our data we do and don't want to share. You can imagine apps on your phone, where you can like turn on location, notifications, using battery in the background for this app, blah, 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 and you just literally have to toggle. You could essentially do that with any part of element of your life. Could be medical history, could be anything. So if you're in a hospital abroad and they go, we want your medical information, you have the ability to manually do it rather than them just jumping onto a database and finding it. Now, healthcare is probably a bit of a different one, because if you're in a situation where you need medical care urgently, personally, I couldn't really care less whether they wanted to access or not, just so it means I had an operation quicker or whatever, But there's a lot of things like fraud in healthcare and a lot of other sectors around there where that could be checked by them as a party. So it's not just for our protection and our ability to accumulate this data or use data and for various reasons. It's also for the other party as well. But that aside, there's a lot of the data, whether it's usage on phones or this, that, and the other, that is essentially sold to databases, sold to companies, whether it's for cold calling, whether it's for sending you ads, whatever it is. Algorithms are there for a reason, right? So there's all these really interesting things as you delve further and further into the kind of case studies as to why this could be important. So we're talking about KYC. Just imagine in your heads, guys, like just think of simple things. As I mentioned with the passport control, you can apply that to pretty much anything and everything where we might need to be using our identification, logging into our phones, whatever it might be, just anything and everything. Just think of that, but then multiply that number significantly by the fact that half the world is asleep right now. They'll wake up eventually within 24 hours or whatever, and the cycle continues 24/7 around the world constantly. But all these frameworks, all these different countries, all these different continents have to talk to each other 24/7 at the same time. But also when we're doing things, imagine how many billions upon billions upon billions of people around the world utilizing similar things or things that involve the internet or transfers of action every second. That's why you'll never have one blockchain winner. No chance. But you can certainly have some frameworks that then incorporate other networks and blockchains to then spread out to potential different sectors or different elements of that. But they still need to talk to each other, which is why interoperability is important. That's why we always talk about other projects like Quant, for example, that are very important in that area, albeit mostly for finance, for Quant's perspective, but the application is still relevant to all the others. So from a KYC perspective, and I know a lot of people don't like KYC, but the fact of the matter is exactly what I said earlier, people are fickle. When it eventually gets to a point, no one's going to go, I'm not going to use the phone anymore, this, that, and the other, because there'll come a point very quickly where you're like, I need to use it for banking or this, that, and the other, because all our banks are closed. We almost have like no choice. It's coming whether we like it or not. And it's like Raoul Paul said before, and like I've said on the channel many times, like you can't stop all of these things happening. You could be against them, you could be arguing against them, but the fact of the matter is, it's too powerful. So let's invest in it. Let's invest in the demise of society, and our morals and principles basically are just disappearing. Let's just invest in it instead, right? And maybe we'll exit the system somehow or get a bit of an advantage over the next 5-10 years before the 2030 goals come in. You might think I'm talking nonsense, but I've been on about it for, certainly since 2015 for those that know me, and I've been on about it probably since the beginning of this channel. It's all coming to fruition, so if you haven't seen it or haven't figured it out yet, you will soon, because you'll be using it regardless. So we go to this point about KYC. I'm just going to really kind of focus on some key identifiable points here. You've got the banking financial industry, you've got digital identities or e-government. E-government's a really important topic now, guys, because here in Europe, well, not here in Europe, but in Europe in general, you've got digital identity regulation going through. EI DAS, I think it's called, 2.0. That was as of last year. We covered that in a video. This is basically the ability of digital wallets, digital identity wallets. It will hold everything and everything, personal attributes, age, etc. You'll apparently have full control of all the data that is shared or by whom and to whom. Will we get paid for that? Potentially, because that could be an argument about the ability of blockchain to be able to say, well, if you want my data, you can pay me for it. You can pay me in crypto. That's what the whole point about it. CBDCs, all of this kind of stuff is for these purposes. Play to earn, eat to earn, walk to earn. Data, will be something that you could actually require money for, or at least find out if someone or a company has used your data without your knowledge or your approval. Smart contracts, etc. Bear in mind, smart contracts, when we're doing these things like on Ledger, when we're signing smart contracts, that will all be automated very soon, guys. Very, very soon. With our eyes, with our biometrics, or as I said, with the ability to manually toggle on and off what we do and don't want to share. So you've got these huge elements. We've got exactly the same thing going on in the UK, the digital wallet. People thought I was going mad when I talked about this years and years ago. It's on our doorstep now. And people are now being able to download an app, I believe, this year for digital licenses. That will be passports soon. All these things. The smartphone is a stepping stone, guys. When we have retina display verifications, just walking through things and it's just happened, or your facial recognition working in that way, all of those things that have to be verified in the background will be going simultaneous at speeds you can't even imagine or fathom, being process validated by blockchain. AI is doing its bit as well in the background to process and help validate, etc., or see trends, or where might this person be going, whatever it might be. And it all works together. This is all going to be in the next 2-3 years up to 2030, guys. It will all be integrated. That's why we've got certain people like Starmer here in the UK. He's there to pass all the AI laws, all of these things. Like Sunak was here a year or so ago to pass all the blockchain laws. It's not coincidental. All these people are related to the World Economic Forum, right? So you've got that digital identity, e-government aspect as well. Again, look, cross-border identity matching, all of these things about integration and frameworks. IOTA is a huge part of this, guys. It's already being part of the piloting framework system for the whole European Union. Multi-billions of people will be using the framework of IOTA, whether you like it or not. Not directly, but you'll be using facilities, services, applications, equipment that will be running on all this stuff. It's crazy to think about it, but in 5-10 years time, projects like IOTA's price will be phenomenal because of that ability of requirement that's needed. Yes, people argue that IOTA is a feeless, but you still need a load of it to work, especially if you're operating those kind of transactions per second. Of course, we talked about KYC with crypto and DeFi. I don't think we need to go through that much because pretty much any of you that are in crypto have logged into some form of exchange at some point, I'm sure, and you would have had to fill out KYC information. Again, that information has probably been shared all over the place. Who knows, depending on what exchange you signed up for. But they can see anything and everything now. We've got laws going through in the UK, essentially, albeit not to this craziness right now, but eventually in the future it can do. Where if you're perceived to have not paid certain bills or maybe tax or this and other, the government doesn't even need to phone or call you anymore. It can just access your bank account and take the money out. And well, I don't know what happens if you don't have any money and you can't afford it, whatever. I'm assuming they put you in negative and you have to go and do something about it, like pay a loan or whatever. It's no different to me, self-employment, for example. If you don't pay the bills on time or properly, you get interest charged on it. There's no doubt in my mind that they'll probably start doing that to anyone and everyone in that instance. But you could be paying things on time and they could just access the bank at any point. That's the whole point of what I'm trying to say here. It's just the ability of this framework to be so open, but equally some things can be a bit scary. Supply chain, trade finance, a huge topic that we talk about on the channel all the time. Of course, you've got the aspect of vendor and suppliers talking to each other, verifying the legitimacy of the supply, where it's come from, the potential fraudulent reduction, the counterfeiting. Of course, you've got the actual payments of things, creditors and debitors, that be going faster, making the economy faster. Of course, being compliant with the international regulations as well, which is the whole point that we mentioned earlier. And as I said, healthcare, insurance in general is massively huge as well. So from the EU perspective, or the EBSI, when you're enhancing that digital identity and trust aspect, it fully allows IOTA to be the differential here in terms of its framework ability. So securing that digital identity wallet, sharing personal data with different institutions or companies or other people and vice versa, reducing fraud, cross-border services via each countries or outside of the European Union and vice versa there as well. And it will just boost the efficiency. It will reduce costs significantly by multi-billions, maybe potentially trillions. If we looked in the trade finance market, how blockchain can make, $5 to $10 trillion market there. It's gigantic. Self-sovereign identity, empowering users essentially to be able to be more astute with everything, and arguably more secure as well, which is what everyone wants, right? Because that's what I'm saying. People don't like or maybe want these things, but eventually something will happen. David Icke's philosophy of, have a solution, you might make money on it, create the problem, put your solution in, make loads of money, on to the next one. It's exactly the same principle here. Something will happen. Like we have seen, if you want a prime example, I've mentioned this many times before, when I was at the sort of digital pound events and many things years ago, they wanted, I think it was like 300%, they wanted a 300% increase in cashless payments in the UK. And this accelerated to 13,500% during the pandemic because people were forced to have to go and use tap and go. They were either through fear mechanism or just going, it's easier if I can just tap this and go, or I just didn't know how to do it before. And you get forced to do it. The banks close, so you can't talk to anyone anymore or worry about it or get cash out. So it's forced upon us, right? Can you see the pattern I'm trying to talk about? So when you're an investor and you're going, why is IOTA so interesting? Well, because it's creating the framework for a giant continent, i.e. the European Union in this instance, for the framework of so many applications of blockchain. And one of those of which we've decided to talk about in this particular video is KYC, identity, sovereign identity, whatever you want to call it, digital identity wallets. Hello, if everyone has to download this wallet and they're utilizing all of these things, and you're utilizing things in a physical world and the digital world, whatever you're doing will be going essentially through the IOTA platform one way or another at some point in the future. I don't know what more I can say about it in terms of that long-term approach of IOTA, but for me, that collaboration with the European Blockchain Services Infrastructure, or EBSI, the enhancement of KYC, the efficiency aspect of it, all the things it ticks the boxes for, counterfeiting, anti-money laundering, everything that you can think of, the ability of developers to come on and improve it all the time. Who knows, quantum computing in the future as well, kicking in as also as another addition to AI, IoT, 5G, 6G, blockchain. Wow, what a future, guys. Scary, but it does show you as an if you're an investor and you're thinking ahead, there's a giant opportunity there. Guys, we've gone on about 20 minutes for this conversation. Let's jump into the chart quickly of IOTA and reminisce on that point just now that I made, where we could potentially get to with IOTA. We said it in previous videos, the maximum here on the fib levels is suggesting for around $4, $4.50. I still think that's applicable for 2025 if more announcements come out. If not 2025, I could see this happening in 2028/2030 in the next big cycles. You've got to understand that some people argue like, we had the run here in 2021, obviously. We went into the bear market all the way down to 12 cents, guys. Incredible opportunities to buy IOTA. If you weren't aware of IOTA, there's not much you can do about it. There's no point stressing too much. The fact of the matter is it rose up quite recently to around 60 cents. It's now back down to 20. It's waving at us saying, hey guys, we're still here just about before we take off again potentially in the near future. As I said, I think this is all really dependent. Projects like this, there's a lot of money in IOTA already. There's a lot of investors in IOTA like myself for many years. It's going to take a lot of money for us to get back to these 2021 marks, let alone the $4. And I think that's why I'm sort of conservative about this happening this year. It's definitely possible, but I think more reflective, more honest in my mind, I would be saying that that's in like a few years' time, because the infrastructure is so early, because the adoption is not there yet. The principles, the opportunity of IOTA was back here in 2021 in the sense that the concept was there. It started the EBSI conversations, which is why it got exciting, as well as the general market influx of FOMO and new people coming into the crypto sphere. Of course, there's that organic growth as well on top of the initial case studies. That has died off. We've had some good case studies since then, and it hasn't really had any massive reaction. So until it all gets fully switched on, that digital wallet of European Union is live, it starts announcing, well, who's behind this? How is it working? And people around the whole world go, AI, blockchain, oh God, I must suddenly all of a sudden invest in everything again, or never have done before. I must do it before it's too late. That's when the money starts trickling back in. as well as hopefully the stimulation of 2025 and years to come, having that organic growth also. That's where I think we can push back to the previous all-time highs and even higher. Let's see if that plays out. But at the moment, the current point in time with looking at the RSIs on the bottom left here, 14, 28 day respectively, we're at the 40/44 mark. And that's a good bite point in my opinion. I'm just going to quickly move across these previous fib levels, just give us a bit more indication as to what we could potentially anticipate in these coming weeks. So you see, we've had the massive drop down again from 40 cents all the way back down to I think 17, retraced itself quite quickly within that day, and now we're floating around these markers here. So you see the little green dotted line all across here, showcasing the current price point as we're recording around 24 cents. So it's playing in amongst this area of around 25 and 22. I'd like to see some stability here, and I think that's what could give us potentially the projection. I'm suggesting maybe the next month or two this may happen, is we start facilitating that upward rise to retest the 32 and the 44 cent markers again. Don't be surprised just yet, because of this massive influx that we had, which started on the 3rd of November, arguably ended 3rd of December. So it's only a month. It shows you how quick things can move in 1 month. We've had this over purchasing pattern. That's been evident here. People were taking profits, of course, understandably, but then people lose confidence, which was around about here. Then we had the market reductions, etc. Trump administration, the backlash of that. Not necessarily the backlash, but people had already made the money kind of thing. So we're now floating around this area. If you remember, I marked this before because I said this is a really interesting area where I think we'll come back and retest at some point, and we are literally there right now. So let's draw it over here again, so match it up. So there is no doubt that we could potentially come and retest the 20, maybe back down to the 19, possible retest of the 18 again. It'd be quite interesting if we do that. But that's why I'm saying maybe in a month or two we'll start seeing that upward trend. But first we need to secure this area with confidence and stability, bit of sideways trading, as it were, before we can start retesting these. Bobbling up to this area, bobbling around for a bit there before we can take this uptake. It may not happen instantly, but the argument is, well, it usually has done in the past, even in this period here. Look at that, over 3 days, going from, I think, 21 cents all the way up to 40. If you're looking at the whole week, that's when it went to 60. That's pretty mental, really. So if we have another market influx, potentially like around April time, end of March, April time, end of tax year here in the UK, loads of other financial things going on around the world, interest rates, etc., etc., it could be really interesting timing. That's why I think this is also a good timing. It's not financial advice, of course, but these RSIs on the bottom left here suggesting 40, I mentioned as a bite point, purely because of historic way I've been investing or accumulating, is waiting for these kind of areas, because there is more opportunity for the uprise than there is lower. Yes, of course it can come down low, but that's why we DCA. We dollar cost average in the sense that we'll put some in now. Doesn't just because I've got a load of money here ready to put in doesn't mean I go and chuck it all in straight away. I do in percentage incremental values. So I'm willing to do some around this area in the next day or two. If it drops back down, of course I'll try and accumulate some more. On the uprise, I don't touch it. I didn't sell off any up here because I'm a firm believer of IOTA being so much higher in the future, and I don't really want to mess around with trading this one. That's my decision, my strategic decision on this particular asset. If you want to do short-term trades, day trades, there's plenty of channels out there. I'm here for the long run in a lot of these projects. Some may come out successful, some may not, but I know IOTA's potential. I know how big it's going to be. I mean, some of the examples we just went through are phenomenal opportunities for IOTA, the framework of blockchain in general for European Union and worldwide, of course. It's not just the European Union, but they got essentially the first dibs on this. It's a huge continent, a lot of countries, great countries, a lot of technological advancements to come. Guys, we're going to wrap this video up there. Let us know in the comments below if you're holding IOTA, you've been buying, selling, what's your plan? Do you anticipate a big 2025 for IOTA? Are you more interested in the long term like I am? Let us know your thoughts and opinions down below. Thanks for watching. We'll see you in the next update video of IOTA. Bye-bye.